What's going on, everybody? It's October 18th, 2022, daily episode log 32. Today we'll be covering what happened in US 500. And if you're following along in the Telegram chat, I have the Telegram up right now. And I'm going to kind of walk through what happened today, because today was very much, I would say, like a leg day, if you've ever been in the gym. And it will teach you a lot about discipline. It will teach you a lot about patience. I think personally, what I did today was very, very well on my part. It may not look like it, maybe from an outside view, possibly. And, we didn't even come out with a profit. We didn't even take a trade. But to me, I like to look at the pros of what happened today and try to pinpoint, what can I celebrate? What can I, look at as a win? And I talked about my last message here in the Telegram, how your discipline, when you follow your rules and you obey them, and you're just short of taking a trade, it misses your limit, or price was a few points away from your entry and you didn't take the trade. And some people look at that as a negative, and it went right to the target, went right to where I was looking at. And I said in the very last post in my Telegram today to start looking at those as wins. Start celebrating when you're being disciplined, even though you missed a move, quote unquote. That's a misconception I feel like a lot of people have, is the whole missing the move quote, because I described missing a move as when, example today, that 5-minute fair value gap, I was more than happy to go short on that because it was inside of a premium. And if I didn't take that trade, that's quote unquote for me missing a move. Today, I didn't miss anything. There was nothing in my criteria or my rules. So I celebrate that I followed my discipline. Could I have taken that trade today on lower time frames? Yes. But what that does is starts breaking your rules. And, when you break your rules and win, and then you celebrate that, that's terrible. You actually lost when you break your rules and win. That's a terrible mindset and a terrible thing to have, because what that does is it starts creeping into a lot of different things. You'll start breaking little rules, you start making exceptions for things, and what that does is it starts messing up your entire discipline, all your rules that you have set for yourself. And then you start going down a bad path. You start having inconsistent trades, you have inconsistent profits. So even when you miss a move, quote unquote, and you didn't take profit, you didn't make anything today, celebrate, pat yourself on the back. And that's something I learned from the mental game of trading. Sometimes you really have to look at yourself and be like, you know what, I did a great job today. Because my older self would have chased this stuff. I would have been trying to buy and sell, and I would have had 4 or 5 different entries a day. Some of them would have stopped out. I would have been more mad at myself. So I'm very, very happy with my performance. With that being said, let's go into what happened today. I'm only able to pull up a little bit of the Telegram here without exposing too much. But looking at the morning session, if you followed along with the pre-New York session logs that I do, I was actually looking for longs. I was looking to continue that higher time frame narrative, because looking at the daily time frame when it opened, we were so bullish. And coming in New York, I was like, man, I don't think we're going to retrace back down into that opening gap from yesterday. It was just my personal opinion. As you can see here, I said the overall drawn liquidity is 3807. And then I was saying to pay attention to the 1-hour order block with the fair value gap there, and then the 30-minute. And that wasn't an entry for me. If you watch the pre-New York session log, I was waiting for that displacement into the fair value gap, see how we reacted off of it, and then we wait for the lower time frame bullish displacement, then the fair value gap and a discount, then we go long. We never got that. So I was saying watch the 1, 2, 3-minute relative equal lows. If we purge those, we'll displace higher. So let me actually, I think this is going to go away if I do that. I said it was a fake swing lower. Watch the 30-minute closure, which we closed above the fair value gap. And I said I would need a displacement higher plus the fair value gap market structure shift with a discount. And I was looking at the buy side resting here. And if you pay very, very close attention, I would need a closure, keyword closure, above that high for me to really like longs. So I wanted to have a closure above that high here, and then have a nice fair value gap and a discount in order for me to go long. And you see how my rules are protecting me. Now, if I disobeyed my rules, that would result in a loss today. There's going to be times when your rules keep you away from making profit, and that's okay. They're designed to do that. And somebody actually commented today on my YouTube, how do you know your rules are the correct rules? And my rules come from ICT. It comes from the source. Everything that I do is from him. So I have faith in him that these rules are set there to protect us and help us. And I also have evidence through back testing and through forward testing this model that these rules work. They're set there in place to protect you. So follow them. If you need a good set of rules, go through the YouTube Mentorship 2022 on ICT's YouTube channel, and it'll give you a set of rules that you can follow that are very simple, and that way you're not jumping around as much. So I would need to see bullish PA soon. Now let me go down to where we were at that direct time so you understand my mindset and what I was thinking at that time. So if we go down to a 1 minute time frame here, so you guys remember that picture that I put up? I was looking for the closure above this high here. Was there any closure above this? No, there was no bodily closure. The wick went through it, but not a body. So if you look at the telegram, I would need to see bullish PA soon, 9:16 a.m. So we were resting right here. I was like looking at this, I'm like, you know what? I may be wrong. And this is where experience comes in. We're able to switch on a dime your bias based on evidence that the market is no longer supporting the bias you previously had. And I could tell that through how price was respecting bearish PD arrays. And I'll show it on the 5 minute time frame. And I said, or else we attack the sell side resting at 37.37. So 37.37 is right here, 37.37. And that was all at 9:16 a.m., which 9:16 a.m. was, if you look at the bottom there, it was right here. So I was already flipping my analysis. I was already like, okay, I think price is actually bearish. Now let me get an alignment. And I said, notice how I said closure. We never got that. Then I noted the 5 minute time frame. So if I go up to a 5 minute, I had a 5 minute pulled up. And when we were resting up here, when I was about to switch bias, I was looking at how we were reacting off of this bearish order block. So these last two up close candles here are your bearish order block. And if you take from the dealing range high down to the dealing range low, we're inside of a premium. And prior to that, we took out buy stops here on even like a 2 minute. You can clearly see this is the YouTube model just in a short form. But there's no fair value gaps even in here for me to really even want to go long. Okay, so in the 5 minute, we retraced back into the premium relative for the dealing range high down on the dealing range low. And once we got underneath this low, I stated 5 minute. To me, this was low probability. So when we were resting inside of here, I wasn't really looking to take a long or short. I was waiting for price to really prove itself. So 37.37 was traded to, which was underneath the low here. And then I said 37.14, sell side liquidity, study that. So 9:28 a.m. So that was right around in this candle here. I was noting the sell side liquidity resting here. Now, why did I say that? Because I could tell that price was in a sell model. We took out buy stops here, took out buy stops on the 5 minute and lower. Price was respecting bearish PD arrays. And this is the nearest sell side liquidity to me. And then I was also looking to aim at the opening gap of the day from basically the open of yesterday. So that was the nearest term liquidity pool for me. Then I was annotating the 5 minute time frame. So I was looking at this fair value gap right here. Now, the reasoning I was looking at that fair value gap was due to, let me see here. I'm sorry. I was looking at this dealing range from the swing high here down to the swing low. So I was looking at this fair value gap, and the fair value gap is inside of a premium. So That's the rules that are set in place for us through ICT. That fair value gap needs to be in a premium if you're selling, and it needs to be in a discount if you're buying. Is this fair value gap in a premium? Right here, this little small fair value gap here. No, it's not. Looking at the 3-minute, this fair value gap right here, is this inside of a premium? No, it is not. I believe even the 4-minute fair value gap, not inside of a premium. 2-minute, there wasn't one there. I mean, right here, but that's not inside of a premium. It needs to be above equilibrium. Okay, so that's the whole point of your rules. Like, yes, we missed it today, but on the flip side, your rules protect you. Your rules protect you from taking losses and, FOMOing in the market, making mistakes that you shouldn't be making. At times, yes, it's going to keep you away from quote unquote making profits, but in the long run, it's going to work out. I promise you. There's going to be plenty of setups where we do get into a premium, we do trade in that fair value gap, and then we trade lower. Is there, I feel like some of you are already questioning, is there a time or place that we're going to know that we're not going to trade up into this fair value gap? No. Through all the research that I've done, even through the charter member forum, plenty of charter members have asked the same exact question. There really is no telling. And there's a few other things through charter member that I've learned that could possibly, figure that out, but in reality, it's just one of those where you just have to let the trade be. You draw your the line in the sand, and you demand your entry for the market. Okay, I always say it's our entry or nothing. I'm going to demand that the market comes to this, and if it doesn't, then I'm killing the trade, killing the limit, and I'm out of the market for the day. And I feel like that's how, it's not even a feel, I know that's how professional, consistent profitability, exists, is you follow a rule-based system. Looking at the rest of the day, we traded back into the opening gap, which is resting in here. And then we've since then just have displaced higher, which makes sense because we're overall looking at the buy side liquidity here. All we were doing was dropping down to fill in that opening gap, that volume imbalance, and come into a discount to then expand higher. And I believe ultimately tomorrow or the next day, we will expand into the buy side liquidity resting above here at 38.06. So let's go out to the daily time frame here. There's still now a volume imbalance on the daily time frame. So just note that on your charts. We've now closed above the premium end of the bearish fair value gap on the daily chart. So that really indicates to me a basically bullish bias until proven wrong till 38.06. Weekly time frame. Nothing too much to note. I think we can obviously climb above that high here, and then we'll start to look at maybe some other PD arrays to target, but I don't want to go too much right now. Let's just focus on 38.06, and then we'll once we arrive there, we'll reanalyze where the market is going. And I think that's going to be it for me today, guys. I'll talk to you guys tomorrow morning with the morning update. Until then, good luck and good trading.